to it with our intro. Welcome to Sunday ETM. Today is July 27th, 2025. Man, time is just flying by. It's
Tell me
flying
about it.
by. But like we always do, as is customary here, we start off by asking ourselves, well, first of all, we have to introduce ourselves. For those who don't know, I'm Marcus Morpheus McKinney, along with my man Gerardo G Money Paez, the mastermind, COC. Yeah, baby. We're here again, and we've been trading for a number of years, mostly together, always partnering up to bring the best out of ourselves and out of the markets. But we like to start off by asking ourselves, posing this question to everyone: what is the matrix? Right? And we like to say the matrix, um, the way that we describe it, the way that we like to describe it is it's multi-dimensional, multifaceted. It's a place that will seek to place perceived limitations upon us, right? But we believe here at ETM that we can transcend those perceived limitations and become the best traders that we can possibly be, and hopefully along the way, better versions of ourselves. But what we have to realize is the matrix is not just one prism, if you will, right? It's multifaceted, multi-layered. The moment you think you've broken free from one, you've moved into a new level. But if you're not aware, you can find yourself roaming and rotating and still, quote unquote, trapped in another level of the matrix. You and I talk about this often
Hmm.
in this world of Forex trading, if you will, and trading education. We can get caught up in, several layers of the matrix and find ourselves chasing things that are really illusory, right? They're an illusion, right? The certain fame, fortune, and lifestyles that are very uh, easily desirable, right? To many. And we enter into trading with the wrong mindset and for the wrong intentions, right? At heart, right? We want to break free from certain things, but we find ourselves chasing that which we really don't desire, but we're told that we should achieve sooner than later if we follow this path.
Right.
But as we say here, we're here to understand that we can transcend those perceived limitations and even those perceived desires and become the best traders that we can possibly be and better versions of ourselves. So,
Actually, we don't mind going back, Marcus, real quick, because
okay,
that did bring me something up. We used to say that, the Matrix is a system of control, right? And what's
right.
popular out there? What's popular out there? I got to get out of the Matrix, right? I got to get out of the 9 to 5 type of thing.
Hmm.
Remember, the Matrix is a system of control. Well, if you get out of the Matrix, you get out of the 9 to 5. You find opportunities outside of 9 to 5. Back to what you were saying, Marcus, like those things have their own system of controls,
Hmm.
right? The
Right.
question is, right, how can we find ourselves to be actually really free? What is something that is really free? And obviously, trading is one of those things, right? Trading is one of those things because it allows you to multiply your money at your own pace, at your own desire, etc. But at the same time, like you were saying, the system of control that the trading world has, right? Following an individual, it's
Hmm.
it's my system or the highway type of thing, or like things like that. Those are also another type of system of control that can get us trapped. So this obviously this is what do we call this, Marcus? The ETM reloaded, or we call it something, I forgot. This is really to get people out of the matrix, get people thinking for themselves, and these are the kind of things that we're bringing up now.
Absolutely, absolutely. Good point. Very good point. Like you said, getting out of a system of control where if you are working a 9 to 5, you can perceive yourself or feel like you are perceived in a certain way, and you want to break free from those proverbial shackles, if you will. And trading is a way to create financial independence, right? Because of the way that mo money can multiply in a short amount of time. Um, and so we follow that path, and what you can find yourself doing and reaching for is chasing that idea of rapid expansion or rapid increase or rapid growth, rapid compounding in a very short amount of time. And in order to achieve that, you can find yourself, you know, acting possibly out of character, or more so, what trading often does is reveal parts of our character that may not have been aware of. If you struggle with, your perception of money, your perception of freedom, your um idea about greed and the lifestyle that you think you should be living if you are quote unquote financially independent. We can find ourselves really chasing those things and trying to acquire those things without taking the necessary steps uh, to not only attain those things, but maintain and hold those things. Because if you travel there very fast and, oh, I'm gonna quit my job now. I made this amount of money in, you know, 8 months. You know, are you prepared to hold that, or will you continue to increase risk exponentially in a reckless manner? And in a moment's time, you take massive losses. How will you handle that psychologically? So it's a it's truly a skill, right? And we respect the skill. We respect the craft, if you will, of trading and being a trader. Um, all of the things that I just mentioned in terms of financial gain, all those things are relevant and all those things are attainable. Those things are true, but two things can be true at once. We can reach for those things and be reckless, or attempt to reach for those things and be reckless. And we find ourselves spinning in circles. And guess what? You're still in the matrix. You just
Right,
didn't
man.
realize it. But let's
Right.
get free.
Yeah, let's go.
And the first thing to understand, as G will so eloquently share with you all, is this inevitable truth that there is no spoon.
Awesome, man. Well, yes. If you guys, are familiar with the Matrix movie, as we were learning to trade and kind of like understanding the psychological part of trading, we realized that, you know, we use three themes from the Matrix movie to kind of come back and parallel some type of guidance, some type of mindset. And the three of them are, there is no spoon, free your, I know kung fu, and free your mind. So, very first thing here, right? There is no spoon. The market is fractal. Okay, this is kind of what we want to say that. The market is fractal. The candlesticks, the higher highs, everything. Those are patterns, right? Those are price patterns. And here, based on this definition that we have, a fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. So what is that saying, right? That's basically saying that, that the price patterns are almost the same. Things are happening the same, are being created the same across different time frames. Okay, across different time frames. And so as you're back testing, right? And you realize that there's an impulse. Well, you measure low to high, you fib it, and next thing you know, okay, this is the setup. Well, in another time frame, that same impulse can be in another direction, and you can do the same thing and the same markup as you go forward. And that's what makes trading easy for us guys, is because the market repeats itself over and over and over again. Our strategy should be repeatable over and over and over again, right? Our entries should be almost identical almost every single time, right? But and that's what we mean by the market is fractal, right? Once you understand that and once you see it more specifically, it's like, okay, I see it now. Now is just time to find a good trading plan that fits my time frame, or that fits my time to operate, and know how to capitalize it. But here's the next thing from here, right? We cannot bend this market or the spoon to our will. We only seek to realize the truth that the market is a constant flow of opportunity based on your perspective. Your perspective is what matters, guys. Not mine, not anybody else's, yours, right? Yes, I have experience in the sense of I've seen the charts do this and that. But again, though, right, if you don't see the opportunity, right, you're not gonna really grow from it, right? You really gotta see the opportunity for yourselves. And that's the thing, right? This is one of the things that we're trying to get you out of the net, out of the matrix, right? Is that you have to see the opportunity for yourself, and most importantly, right, based on your perspective. But yeah, that's how the
Oh,
market is. Go for Marcus.
no, I was just gonna share that's a good point when we talk about perspective. I just wanted to jump in real quick. It just made me think about when we first started uh trading, some of the trades that we were taking were certainly not based on our own perspective. At least, uh, I'll say both of us, but I'll speak for myself. I know some of the trades I was taking. Well, both of us, we would take trades that were not based on our own perspective at the time. We were like, okay, someone says, this particular asset is going to buy at this level, this price or whatever. Like, okay, we're going in and we're taking trades um, and we were losing money, losing trades, and not really understanding that our perspective is important. And if you don't have any perspective aside from what someone else is telling you, then you don't need to be in the market, right? You first need to at least understand their perspective, right? And then get to the point to whether you can truly decide if you agree with that perspective or not, right? And then move on from there, right? There's levels to it. But it is truly based on your perspective, even if you're receiving other information. We're all receiving information. The market is giving us information. Uh, we may be in groups that are giving us information, different groups, and saying, hey, this is going to happen, that's going to happen. Nobody knows what's going to happen, right? But then you have to take all that information and develop a perspective
Amen.
for that time in the market.
100%, man.
Yes,
100%.
sir.
All right. So I know Kung Fu. So what will you be learning in this class, right? Well, for the most part, right? We teach the ETM candles, or the ETM candle pattern, and we'll show you how to identify those. We have an indicator that's free that we'll share the link here if you don't have it, of the updated ETM candles. Also comes with another a lot of other cool tools like your lot size calculator and just some other things mixed in there, the Oracle. But here's the thing, that I believe, we've done right, Marcus and I, right, is that we try to teach the simple movements, right? And based on James Clear, Atomic Habits book, chapter 20, when you know the simple movements so well that you can perform them without thinking, you are free to pay attention to more advanced details, right? And that right there sets the foundation for kind of everything of the way we teach. Okay, the way we teach, and obviously we teach a very big. I mean, the ETM candles alone can give you entry, exit, and risk management. Most important thing from there is connecting those candlesticks to the right, not to the left, to the right, and seeing the price patterns. I mean, the price is on the right hand side, right? But for the most part, right, this session, we will have here the ETM candles, show you how they work. We'll find some examples. And then from there we'll do a outlook to close out the session. And any questions you guys have, they will share the link to the indicator. And I'll look for it when Marcus is wrapping up for your mind. But yeah, Marcus, let's get it,
All right,
man.
all right. Let's get it. All right. So the concept, just want to leave you all with for the intro is believe, as you can see here. I think I spelled that right. Believe. Uh, if anyone is familiar with the movie The Matrix, which is kind of what a lot of our stuff is based on, as you can see, um, that was one of the first things that Morpheus proposed or expressed to Neo um, when he got free is that he had to believe in order to take that next step, right? You're you're out of or you're coming out of the matrix, so to speak, right? Or looking to come out of it, but you have to believe in order to really take that next step. You have to free your mind, right? You have to let go of fear, doubt, and disbelief. And it's very true. And those are things that are challenging to truly let go of fear and doubt because the market will uh, affect those things if we allow it, in a very what seems like real way, right? When we're losing money, when we're possibly bleeding out at times, um, that's going to create some doubt when we're in a trade. And maybe we've gotten that trade and we didn't develop our own perspective. We got in because, we're excited. The market is moving. Um, People saying, oh, it's buying. Gold is buying. Gold is buying. Right. Where do we get in? Where do we get in? Where do I get in? Right. And we're just like, right. And then when the market starts to go against you, when you finally get in, um, then we are maybe stuck. We're shocked a little bit. We're paused. We're wondering, okay, well, it's going against me. How long do I stay in? So we go in without any real belief about the decision that we're making other than what we desire. So we may go in with a desire, but we don't have a fully developed belief in what we're choosing to do. Right? We're getting in the trade because we want to make some money on that particular trade or overall in general, what have you. But we don't believe in what's actually happened, meaning that I'm making a decision to risk money at this time. That means that I need to know and understand if it doesn't go my way, because guess what? It possibly could not go your way. That is a ever-present possibility in the market, and it does happen, and it will continue to happen that you will decide to make a trade and it will not go your way. But what are you going to risk? Do you know? Do you believe in that trade, in that decision that you're getting ready to make well enough to know that if it doesn't go my way, that this is what I'm going to lose, this is what I'm willing to lose. But if we leave that open on the back end, then we don't really have a fully developed belief. We're just kind of wishing on a star, if you will, and hoping that it goes our way. But when we do focus on establishing that belief, right? And a belief does not mean that the outcome is going to be what you are hoping for, right? One book, if you haven't read it, I will highly, highly recommend is Trading in the Zone um, by Mark Douglas. A couple years ago, we did a full, multi-week uh, session on that one book. But what he does talk about is the understanding that the market is a probability. And I think when we hear that, we kind of hear it, but I don't know if we always internalize what that really means, that everything about the market comes down to a probability, right? Mark Douglas would often say that he doesn't have any expectations in the market. The only thing that he expects is that something is going to happen, right? And you all have may have heard G say this before, either the market is going to buy or it's going to sell, right? We don't know exactly what's going to happen with any high degree of certainty other than the market is going to buy or sell. So when we can bring our expectation, um, I would say down, right? But that's actually raising your expectation to an appropriate level that the market is either going to buy or sell based on all the other information that you need to account for. I believe that I'm willing to risk X amount of money or pips or whatever to see if the market is going to do what it could potentially do, right? And that all sounds very loose because we want to be right. We want to be certain. We want to be like, okay, market's going to get here at this price. Even if you put a stop loss, I'm going to, stop here and then the market's going to do whatever. And then when it doesn't do that, what we expect it to do, then in our minds, we receive that disappointment, right? And that disappointment breaches or can breach our confidence over time if we continue to put that expectation on the market and the market continues to fail. We feel like, oh, the market is failing me, or better yet, I'm failing, right? When in all actuality, if you have a plan that you believe in and you have vetted out that plan, if you will, confirmations or whatever, if you follow that, then it's all probability, right? I follow my plan and the market's going to do what it does. In that fashion, you can be successful in terms of following your plan, which will over time yield out a favorable probability if you have a solid plan, right? Otherwise, if we don't do that, then we're just subjecting ourselves to the randomization of the market at any given point in time. So I say all that to say we must believe in ourselves, believe in what it is that we're truly involved in, which is learning a skill to access opportunity in a market that is full of randomization and uncertainty, even though patterns exist, right? So continue to believe, and you will eventually free your mind.
Yes, sir.
All right.
Appreciate that, Marcus. Good
Yes,
stuff there,
sir.
man. I thought you were just fresh finished off watching Ted Lasso or something. And that's why you got the whole believe there. but yeah, I forgot. Morpheus did say believe
He did.
in there. But I Dulce did ask a question there about intuition. And it does play a lot in there. And again, though, sometimes we just enter because we feel we need to enter and it goes wrong, we lose. And if we win, it's still it ain't the same feeling, right? You have to know why you're winning, and yeah, those things do come into play.
Yeah,
That burning the
intuition.
teeth. Yeah, go for it, Marcus.
No, I say intuition. Yeah, that you can have a feeling about it, right? But again, we don't want to find ourselves relying on
Correct.
intuition in the market, right? Because again, you can have a feeling about something, right? But how does that feeling line up with your plan? We have to really be um, mechanical as much as we can in the market because our intuition can be affected by how we're feeling that day in the moment. Am I excited? I feel good about things. I've won a few trades. And in your mind, like, oh, I've seen this happen before. I feel good about it. Let me go in here. And we can often sometimes, oh, I really feel good about it. I think this is going to work. And that may affect how we uh, execute our risk or what type of risk are we putting on, where we put a stop loss, lot size, all that kind of stuff can be affected, by following our intuition uh, as opposed to following a plan. Um, I don't know this guy's name, but there's a trader who talks about uh, the mind. over trading. I think Mark Douglas actually mentioned this too. The mind that we have coming in trading is not the mind that is going to be able to keep one successful, meaning that how we normally operate in normal life, if you will, is not really how the mind is going to have to work in trading if we want to be successful overall. So that's
Yes,
it.
sir. Yes, sir. Yes, sir. Well, good stuff, Marcus. Good stuff, man. Yeah, these are fun, man. These are fun. I always enjoy these sessions. Remember, we used to do this every Sunday, man. Every Sunday. Did it for
Yeah.
years. We probably need to do this more than once a month, man. I
Yes,
need
sir.
it. I know I need the Morpheus tone in in trading, but I appreciate you, man.
Yes, sir.
Maybe we got to take you out for some steak or something every time on a monthly basis.
You know
So
where I'm at.
let's go. All right, guys. Appreciate the Marcus. We'll go ahead and move over to the technical analysis. Learn these ETM candles. How do they worked last week in the session? And here, yeah, just for the educational part here, we will, as always, right? Um, these sessions are for educational purposes only. So any trade idea or suggestion is pure speculation on our part. So please be able to leverage your accounts properly. But most importantly, right, do not trade any money you cannot afford to lose. All right, guys. So ETM candles, okay, from the top, or from yeah. So the ETM candles, right, into the matrix candles is a system that Marcus and I kind of put together. The ETM supply and demand aspect of things, right? And this happens in every market, right? In every market, when supply is in control, right, the markets usually will go be down. Okay, when demand is in control, the markets or the prices go up. Equilibrium is what we call a fair value price, right? Is basically a price level where we should enter based on who is in control, right? Based on who's in control. So if the prices are going down, well, again, right, if the market is moving an N wave structure, the equilibrium is at the lower high where we think price is going to turn. And the demand is at the higher low where we think price is going to turn. All right. So that's all it means. Right. That's all it means right here. The supply and demand. Who is in control? And then from here we apply the ETM candles. The ETM candles do have some rules, right? Or trading parameters. Control and direction, right? Which way are we going? Are we going to go up or are we going to go down? Where do we enter? Okay. And most importantly, right, with that entry and exit, we can establish our risk management. Risk management. So Um, we do have a recommended risk to reward ratio here based on your level, right? And again, though, right, a beginner, a one-to-one, looking for those one-on-one opportunities is important, okay? And then you can increase your risk reward ratio over time, okay? But again, though, right, this is not a full case study of supply and demand. It's just kind of more of a visual to help us see the market and just use the concept, right? Use the concept to help us. So, how does supply and demand look to us in the charts? Okay. Well, we're using the ETM candles, right? It's a candlestick that has three bars, right, or three candles. One, two, three, and this price pattern is giving us everything. Okay, it's giving us control and direction. It is giving us where we enter, and is giving us risk management. Okay, so control and direction, right? The third candlestick opened here and closed here. Price level did, right? Let's say this price was the price level of 3,000 for gold. It opened there. And at the same time, this concept doesn't have wicks, right? There's no wicks in the concept. So at the same time, because there is no wick, that's the high and the low. Is everybody there? Okay. Everybody, the high and the low is the same thing, right? So the high and the open and the low and the close are the same because there's no wick. So we can see it however way. But the open, let's say it closed at 3,900, 3,000. Let me make it a lot easier for math purposes. 3,200. And then it closed at 3,000. All right. That's the control and direction. Okay. All right. Well, what the control? So what am I looking for? What am I looking for with this price pattern? A BEC, a brother engulfed candle. We're looking for sales. Okay. Okay. So where do you enter? Where I enter at the BEC. That's why it's called the BEC. The brother engulfed candle is candlestick number 1. Okay. So we got the engulfing candle that traditionally engulfs the candlestick to the left. And then the brother engulf candle is the first candle, a bear candle. A bear candle engulfs also another bear candle. That's the BC. So this area is our entry zone. Okay. Entry zone. And what price level can we give that entry zone? What would we say? Maybe 3,175, give or take. That's not bad, right? 3,175, right? And that right there, guys, connecting the candlestick pattern to prices, connecting everything you do in trading to prices, in my opinion, is the most important thing. Because when you do that, right, you know your risk management. You know how to do your lot sizes. If you don't do that, if you don't know, and I think that's where people make it very hard to if you know the price levels, it's hard to learn because you're just studying patterns. And what do those patterns mean to me? No, you have to connect them to price. Everybody talks about risk management being the most important thing. Yes, but you don't know risk management if you don't know how to read the price on the right-hand side. Alrighty. So here, right? That's our entry zone, 31.75. So where's our stop loss? Our stop loss is at the high, which is 3,200. Okay, 3,200. So we wait for price to pull back towards that area. You can set an alarm, you can set a sell limit, set it and forget it. But most importantly, right, from 31.75 to 3,200, right, that is a difference of $25 in this example. Okay, of 25, which in this example, right, is 250 pips. Okay. We in this example, we would risk our entry based on that number. Okay. That a lot of that is a lot of pips, right? That is a lot of pips based on this. But at the same time, that's the whole thing. How many pips are we looking for take profit then for a beginner? Well, at least 250 back, right? Somebody else who's more experienced, maybe we can go for 400 or 500. And then from there, yeah. There. Absolutely, Jimmy. 750. Okay, those numbers are pretty up there, but it is what it is. We'll see the examples more clearly next. The drop base drop, right? There's a 3 candlestick pattern as well. We got a drop, we got a base or consolidation area. That's the entry zone. You let price kind of pull back to it. And then from there, it goes back down. Stop loss, this one, right? If you want to play a tighter stop loss, the high of that one as stop loss 1, or this is stop loss 2. Stop loss 2. So these two were the original ETM candles, and then we kind of saw another one called a break of structure candle. For gold, this was very interesting. For gold, is actually more of a reversal pattern because of the way gold sells. Gold kind of sells very, very fast, and then it kind of turns around. It's just the way it moves, right? But basically, the break of structure candle is very similar to the BEC. And why do we call this the break of structure candle? Well, based on structure, right? These two bullish candlesticks, they formed an impulse, a correction, and then an impulse. Well, this is low 1, and then this is low 2, right? Well, in order for you to really break structure, you have to break both lows to be a break of structure. And then once that happens, right, this is more of your high, this is your low or your open and close, and you try to enter, give or take, about 50% of that. This is kind of using the fib more and so forth, right? But the 38% is another good option, even up to like the 78%. But the most important thing, right, is control and direction. Let price come there and then come back down. Alrighty. But yeah, these ETM candles, right? Also, like we mentioned, right, is that when you know the simple movements so well and they can perform them without thinking, you are free to pay attention to more advanced details. James Clear, Atomic Habits. Anything else here, Marcus, you want to add before we kind of show the demand and control examples?
The only thing I'll say, if you haven't mentioned this already, is when we talk about, these candle patterns and the market being fractal, right? These are patterns that are going to be found on every time frame, um, to a certain extent. And so the main thing that we do and have done with these patterns is training our eye. We used to talk about training our eye all the time to see where these patterns are forming, right, within a greater or a larger picture, if you will. So it's not an automatic or guaranteed thing when we see this, oh, the market's going to get this when gets here or whatever. But it's a pattern just like everything else in the market that forms and give us an indication, of another possibility or of a possibility, be it buy or sell. So just keep that in mind. We've seen these patterns thousands and thousands of times, and we know that they work. All right. It may not work every single time in that moment, but we know that they work, right? This is something that we can, again, going back to the word believe in. So
100%, man, 100%.
that's it.
Yes, I'm watching now the BEC and demand example. I had a student message me. He was saying that there was an opportunity for gold that he wished he could have taken it at the order block under a fair value gap, something like that, right? And I told him, hey, I'm not trying to be funny, but I really don't know what order block means. And then he explained to me what it means, and then I understood what it means. Basically, the last down candle before the up or reverse, right? And
Blasphemy. Blasphemy.
um, and again, though, guys, see if you guys understand those concepts, this is technically right. The last down before the up, right? And there's a story behind all this. Institutions fake people out, and then they reverse it, so on and so forth. Yeah, no problem. I personally just want to focus on who's in control, right? Which candlestick can tell me, what direction should I go, right? And again, if you do have that eye of the fair value gaps, so forth, right? And if this to you right here is a candlestick that communicates to you a fair value gap, right? That's a low, that's a high, right? Where does your fair value gap usually go? At the 50%, right? Or depending on where it is of it. And at the same time, this is an ETN candlestick, right? Because it could have been a wick right here. Actually, it can be a wick on both sides, right, Marcus? Just
Absolutely.
here.
And this all depends on, like like we said earlier, your perspective, right?
Mm-hmm.
And how do you see the market, and or how do you in particular see the market? Um,
Correct.
because for a good time there, um, G was just say, he didn't see the fair value gaps. He didn't see
Correct.
um, you know, the he didn't see the last down before up in that way, and it really didn't speak to him in order for him to be able to read the market and understand, what he was looking at or what was happening and what could potentially happen.
Right.
He didn't see it that way. right? But when we came across the BEC and these ETM candles, it opened in his perspective. It was, a light bulb moment for him. The proverbial scales fell off his eyes in that moment. And since then, he's been able to really see, right? And we've been able to really see, okay, this is how we can interpret the market, right?
Mm-hmm.
Because all of these different methods and ideas and terminology, they all converge, right?
Correct.
Into, they all exist and they converge in the market. That's why we say you know, there's no one particular way to trade, right? People want to learn how to trade, but there's no one particular way. Like there's certain things that are going to allow you to give you a higher probability of being successful, right? But the market is such in my opinion, a good reflective of life because there's no one way to live, one particular way to live, but there are things that are common to having a quote unquote successful and productive life. And even successful is a relative term and depending again on your perspective.
Absolutely,
So
man.
good things to keep in mind.
Absolutely, man. I just had to draw the examples here, just how things work, right? Again, the what's the focus here? Control and direction. Control and direction. The third candlestick, that's the control and direction that tell us the word. And then from here, we wait for the pullback to come to the entry and exits. And the only way for us to know to do proper risk management is by finding that stop loss. Okay, that stop loss is at what area of price, right? Can you do I put the stop loss so where if price gets there, I don't think it's going to stretch down to the stop loss again, right? But this is the yeah. Let's take it to the charts, man. Let's take it to the charts. Let's give you guys a screenshot of this for your viewing pleasure and notes. But yeah, let's take this to the charts here, guys. Okay, and find these examples for us. And at the same time, we'll give you guys for being here the link to the the new indicator. One second here. Let me just load up some charts, man. Been doing a lot of back testing. Um, we'll go over a little bit the the update that I have on the box system that we have, but we'll look for some stuff here. Alrighty. There it is, Marcus. I like playing with this, guys. I'm not sure if you do it, but yeah, we have you can create your templates there. The ETM, the ETM version of it. I like that. And let me open up the ETM candles for you guys. ETM candles, there they are. All right, we got 95 loose, not bad. Yeah, we got the indicator. Feel free you can share it, no problemo. You don't mind. Say, hey, G and Marcus have an updated ETM candle. You guys can share it. Just make sure to like, give us a little comment there. Basically, once you follow that link after you logged into TradingView, add it to your favorites. You have to be logged in, right? Add it to your favorites. And once you're logged in, then you go to your indicators and your favorites, and it's right there. Okay. So this one, right? Obviously, it gives you the ETM candles. As give you the lot size calculator, which is important, which we'll go through it right now, and it also gives you the ETM candles and a lot of other free gifts right there. One thing that I always do like to do, right, is I do like to use the watermark and ETM supply and demand. I do like that. Morpheus and G Money. All your affirmations. You know what? Let's do this, Marcus. Free your mind.
Yeah. Yeah.
All right, perfect. So little affirmations there for you guys, okay? Um, all right, let's do this. So the indicator, right, will give you right here, right? It'll give you they give you the pattern, right? If the pattern forms, it'll give it to you, right? We have a rally based rally, and it points out to you there the rally based rally. Let's find a good one that worked pretty well. This is gold on the forex.com. I've been liking it more on the Oanda chart for whatever reason. Yeah, sometimes it prints the candlesticks a little bit better on the Oanda chart. And again, right, these examples that we're going to use is more so we can train our eye, right? Of how they work, on how that pattern works over and over and over again, right, guys? Over and over again. So this is a very, very good example, right? If we were just to stay on the 2 hour time frame, and then we analyze gold, right? It's dropping, 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 dropping. You can even for example here, right, put a little trend line there and so forth, right? Notice here, right, that price was trying to buy for some time, trying to buy for some time. Even here, right, it created a break of structure candle that tried to push price back up. They just couldn't. And again, right, this break of structure candle did not work. But look at here. Nice BC. The indicator will not tell you it's a BEC until the next candlestick opens. And then there it is. Okay. The next candlestick has opened. You guys see that? It's labeled into UBC, and it allows you to put as you mark up the candlestick just as we had it. Yeah, you can mark it up from here to there. And what time frame is this? Right there. Okay. So this is a what time frame is this? A 2 hour. 2 hour BEC. So what is the BEC communicating to us, right? Look for buys. Right there. Right. I've also added on the indicator, if you double click on it, you can hide the labels if you don't want the labels there. The reason why I did that is because if you zoom out too much, sometimes these little labels kind of get in the way of reading structure. So what I did is like if you hide the labels, you only get the candlestick by itself. You can always change the color on the back end if you like, but it all stays the same right there. Okay. I also added a feature where you can actually turn off the zone. Right, this is a demand BEC. You turn on the demand BZ, it should give you the zone automatically right there. You guys see that? You can turn all these on or off, however you wish. And there it is, right? Now the color is green or red if you want to. And yeah, so it's pretty neat feature. One thing that I did notice, right? It is hard to see a little bit. Um, Let me adjust the color. There it is. One of the things, right, I noticed is that as long as and check this out, Marcus, too. Obviously, we didn't used to see this until some time, but I have a numerical coding here on how many candles this stretches out to ahead. And as long as price is hovering around this section here, everything's bullish. The moment, maybe you can explain it better than me, Marcus. The moment it kind of just hovers over it, it kind of stops reversing or buying. So check this out here. See, Marcus, right there. You see how right
Hmm.
here it got very close to the edge of that zone and it kind of peaked and then reversed.
Hmm.
So yeah, just very interesting how that's kind of working in that scenario.
Yeah, time and price, time and price. So, um, what that when I look at that, what that relays to me from an information standpoint is that if buyers are really there, right, at a certain price level, then the market is going to reflect it. If buyers and volume is there, then it's going to reflect that in the market, right? Because the market is going to execute what the people want, more or less, so to speak, on a very large scale. So if the volume is there and buyers are there, it's going to show, and it's not going to just hover. It's going to move away from a price, right? Because the candles are just the candles. The price is what really matters, right? The candles are just representation of agreements or disagreements about price for buying or selling. And so if people want to buy at that price level that the candles are representing, and there's volume therefore, then the market will reflect that. But if it's hovering, then there's less of a agreement for
100%.
higher prices in
And
an
as
example.
you were saying that, man, it's kind of like a time limit, guys. It's like how much time does this ETM candlestick have, right? And again, though, right, it needs to complete within this time, right? And if you guys see, right, how do we set this one up? Well, you put your long put, and this one I do have it coded just to find the body and open and close. Excuse me, not the wicks, but you can always use the wicks. But here it is, guys. Okay, based on this 2 hour time frame, that's our entry zone. Our stop loss is below there, and there goes we at least want the move to complete, right? At least the move to complete. Make a higher high above this, or whatever it is, right? We want this to complete. That's a 2-to-1 setup. Our stop loss from entry to stop loss. So if you see, guys, here on the right hand side over here, this green number 3355 represents the green line. 3342 represents the stop loss line, and 3380 represents the take profit, right? That right there, right? This is kind of where you use your proper risk management. Let's say you have a $3,000 trading account. You want to risk 1%. Well, from 3355 to 3342, right? That is how many pips is that? 13 pip difference. Excuse me, $13 difference, which is 130 pips of stop loss, right? And over here, it would automatically tell you what lot size to use to make these parameters true. I want to risk 1%, which is $30. I need to use zero point zero 0.02, right? Zero point zero 0.02 to make that statement true. Now, a bigger account, 30,000, will change.
I can't see the bottom of your calculator window that shows the lot size. Is it where
It
it pops up?
right here in the left hand side, Marcus. You don't see this?
Oh, I get never mind. I
Okay,
guess I'm messing away.
cool. No problem.
My
And
bad.
this one says uh 0.23, right? 0.23. And that will make that statement, true. But so see price, see, this was a little tricky, right? Because actually price went higher first before it actually came. And that happens a lot. That happens a lot.
Oh, hold on, G.
Go for it.
It's you said 1%, right?
Yeah, 1%. Did I have that correct?
I was telling you you're risking $300 on the
Oh no,
calculator.
no. I moved it to three. I moved it to
Oh, dude.
30,000.
Okay, I missed that. Okay, well now you're
Yeah.
right.
Yeah, the first example was 3,000, and I added another zero. All good, bro.
That's a good tool. That's well, I mean, I knew it was there, but I'm saying it's
Absolutely,
a good
man.
tool for everyone. I
Oh,
highly recommend us or recommend everyone using it. Not, I mean, you can use the one we have here. There are other lot size calculators out there, but you know, take the guesswork out of it.
mm-hmm,
When you're doing your trade, if there's anything that you can put certainty on, right? It's like, okay, what am I really willing to risk, right? What lot size do I need? Um, the more you do that, you'll begin to able to, see it and do it without the calculator. Just like, we can add and subtract most of us, most of the time without a calculator. Um, and you'll find what what's the approximate lot size you'll need based on the pips, and you want to need to pull out a calculator. But if you're not there yet, I would say use some form of a calculator so you
mm-hmm.
can, be be more aware of what you're risking on your trades.
Absolutely. Absolutely. But yeah, here this one's very interesting, right? It's like the price went up first, came back down, got us a nice wick Instagram entry, right? The only way you don't win this trade is what? If you move your stop loss to break even the moment that wick happened. Because two candlesticks later, it came back, right? And then from there, it did what it did. Okay. But again, though, right, if we wanna like, add more detail to the story, you can. But again, all that happened here was it was just the BEC was it just took some time to play out, right? It took some time to play out, and then once it finished playing out, it continued buying, all right? And there it is, and then price went back up the way it is. Next example here, right? Again, this is kind of like a time limit scenario of the ETM candle. We formed another BEC. And this is a good example how the flip zones work, right? How the same ETM candles can be flip zones. If demand does not take over here, wait, supply, right? Supply, yeah, supply. If the buyers don't take up here, which is demand, excuse me, right? The sellers will let us know fast, and they let us know fast there, right? Even the market gapped up the next day, and he came back and wicked, and there's a gap there as well, and then price just sold off. But check this out here. This is what I was talking about. Remember this time limit? That I tell you, once we get close to that time limit of the candlesticks, the market kind of begins to reverse a little bit more. So this is kind of the area where it says, all right, let's take profit. Take your profit, secure your money, and off it goes. But yeah, these ETM candles, they work with, indices, they work with cryptocurrencies, they work with everything, right? So the candlestick repeats itself over and over and over again. Let's see if we can find a good one here um, for Bitcoin. I prefer, Bitcoin, everything to me is on a higher scale. We have a drop base drop. See, we didn't come to it right away. We formed a rally base rally. Price came to it, used it, and took off. And then it actually came into the drop base drop right here and made a nice drop, right? It made a nice drop. So these candlestick patterns are happening on different pairs, different time frames. We always suggest, right, that the higher time frames are better. The higher time frames do take longer to kind of play out, but they work, right? They work. Another good example here of a flip zone. Look, rally, base rally. Price came in very fast, did not work. It took out the how would you explain this, Marcus? It took out the demand, right? It took out the buyers,
Mm-hmm.
and then from there, right, it used that same equilibrium zone to enter here and then take it back down.
Right. Yeah.
Look at that.
At that price level, I mean
Mm-hmm.
the volume and the sellers were still there in agreement to push price lower. Right. So that's how I would read and interpret
Mm-hmm.
that zone.
Absolutely, absolutely. Let's check out a currency, maybe GBP USD. Um, yeah, so it went too quick, Bernie. Like it just okay. It just yeah. So like remember the ETM. Remember the ETM candle is an equilibrium zone. Equilibrium zone is communicating to us a decision zone, right? A decision. So buyers and sellers, the area where buyers and sellers agree. Okay, are we gonna go lower or are we gonna go higher? Because it got engulfed very fast, right? It's like okay, the buyers are not there. Okay, so now we can just go in the opposite direction. This is GBP USD here. Nice BEC, nice zone. Here in this example, right? It did not touch the body. It used the actual wick. But this is kind of where you can get creative well, not creative, be more technical about this. Measure the entire engulfing candle, like so, or that one right there, right? And we always, right, like to at least start looking for entries around the 23, above the 23%, excuse me. But the ETM candle is more closer to the 50. There it is. There it is. Okay. Always there. Always there. Oh, but yeah, man. I think we're making it too easy, man, with these indicators just giving us the zone.
Yeah, there it is, man. We had to figure all this stuff out before, but hey, you know,
Right.
progress, progress.
That's right. That's right.
We walk so that you can run and fly.
All right, guys. But yeah, those are the tools you guys have with the ETM candles. You're getting close here to wrapping up. We'll go ahead and do a top-down analysis on gold, and we do appreciate everybody being here. These free sessions with the ETM supply and demand. Right now they're doing them once a month. When market is available, and then we also have the trade lounge on Wednesdays. We're building a Discord for that. A little few things that I'm wrapping up there, but once that is wrapped up, we'll go ahead and invite everybody over, and be there, together with whatever trading services you guys will like, right? We have the free version, we have the academy version, and maybe in August I'll open up a few more slots for our private circle session. I'm a private circle group where the ETM we teach the other concept, right, of the boxes, the boxes. Yeah, we'll wrap up here with a quick top-down analysis, guys. I didn't mean to say goodbye. I meant to say that we're leaving. Yeah, give us about 5 more minutes. We'll do the top-down analysis on gold, so you guys know exactly what I do, what we do to market these charts, and we'll get you out of here in about 5 minutes. Top
Man,
10.
it's amazing when you used to look at so many different um, assets or pairs or what.
Mm-hmm.
Now it's just gold and I guess maybe GU.
Yeah, no, believe it, Marcus. Even like I only look at gold now, man. I actually like looking at Euro USD and
Mm,
GU. So these are my top three, and then I pick one yen pair that's in favor. But I kind of stopped trading CAD JPY, so it's mainly UJ and GJ. Okay, anything else, I just have it there, just for just to kind of keep an eye on things. But
mm-hmm.
I literally am only looking for three pairs. Gold for sure on an intraday basis. One of these two, whichever one it gives me the best price action, and one of these three, whichever one it gives me the best price action as well. So three pairs, guys. That is all we have for here. All right, so let's see what gold is doing for us. It doesn't. It's still in that range that we're in. Price did come and wick the open of this candlestick right here on this week. So it's a lot of selling pressure there, guys. A lot of selling pressure with that wick, and I'm thinking here's the best thing I have for us. Let's just keep it simple. Let's take the previous weekly high, and then we take it to the previous weekly low. Okay, just measuring that candlestick by itself. Something that tells me that price wants to come in and come to this open right there. Okay, this is the previous weekly open at some point in the past. Previous weekly open, and more specifically, it was June 30th. Okay, I think we're trying to get there. Okay, so now if I try to study, the control candlestick, it really is a little tricky for that. But let me go to the 4-hour chart from here. I got I got the high and the low of the previous week. The market's either gonna try to make a new low. That's the reason why I like this zone based on the previous week. Um, but if it doesn't, right, you know, we'll use the fib to guide us, more specifically the 23%, to see if we can go back up. But we'll see. Okay, we'll see how this plays out. So let's go now to the 4-hour chart. This is the way I do the top-down analysis. Weekly, get the perspective of the candlesticks on the weekly time frame. That's step number one. Step number two is, okay, let's see how the structure looks on the 4-hour time frame. You know, I don't want to look left way too much, but, you know, on the lines that I drew, as of right now, right, there is some bullish structure, kind of like that, which I think, you know, we may want to start our own impulse down. Okay, so that's what we got right now. If you guys see a channel, right, we do have a nice little channel here as well. Something like this. We kind of, you know, broke up a little bit above there, but we are kind of in a channel where, you know, we could get a pump up a little bit before we go down a little bit further. Alrighty. So that's kind of how I'm seeing the market so far on this scale. I don't really trade off of these uh, points for entry, but we're there. Okay. So here's where we go to the 1-hour time frame. Okay. And let's see, weekly demand BC. Let's see. Yeah, we're talking about this one, Jeremy, or yeah, I'm on the weekly chart. But we'll come back to that. We'll come back to it. But intraday, guys, right? This has become my guide. You know, the box system that we use. I am working on some updates as well. And you know, this basically communicates the 1-hour time frame communicates communicates with the higher time frame and then the intraday time frame. So right now the system on the 1-hour time frame is bearish. So there is some strong bearish momentum available to us here. And I think you know, the market is starting to shift a bit downwards, but the structure or the impulse, even though the system is red, the impulse is still bullish. So I think there are some buyers here that really do, you know, could push price up a little bit and then try to decide to come back down. Okay. This is where we're at right here. So this is the 1-hour time frame that we have. So previous weekly high, previous weekly low, excuse me. From the 4-hour time frame, this is where I come in and measure that high to low. Okay. Measure that high to low with the fib. There we go. Perfect. So because the previous week did close bearish, the fib is pointing downwards. I would like to see how price behaves at that 23% level. And again, the strategy is, right, where is price going to go? Well, that 23%, 38% level is an area that I would like to see price go to and see how the sellers from there behave. Okay. So I would like to see something like this. And if we can stay, if we come back below the 23%, I like our sales to go down. Okay. If we stay above the 23%, we could correct back up to 50%. So as of right now, this is kind of what I'm favoring the most. For gold. Okay, right there. I am favoring us to get back to 23%, which is around 33.52, 33.60 zone, and see if we can get the sellers to turn price around. All right, on the 1-hour time frame, the momentum indicator that I have, this is the one I'm talking about that is part of the inner circle group. And in August, right, I'll open it up to some more members to join. Okay, perfect. Andrew's asking, is the 23% around the 50% of the previous day? Let's check it out. It is, Andrea. Good observation there. So see, this is the Friday candlestick. The Friday candlestick. If I measure that candlestick by itself, right? And if I put a regular fib on there, and that is exactly right. Absolutely. Good job. You're starting to see the market in every corner. I love that. Another observation here that is catching my attention, right, is we formed 3 consecutive bearish days, right? That's also important. Price likes to pause after 3 consecutive strong impulses. We got 3 consecutive. This is credit to Ms. Letitia Young, right? 3 consecutive. And again, time frame is important, but time frame, this is practical. It can repeat itself over and over, right? 3 consecutive strong candle closes. We had a pause and a nice pullback. This one was not as strong, but there's 3 consecutive bullish candlesticks, pause for a long time, and wick there for a minute, and so forth. Right? Even last week alone, 3 strong consecutive bullish candlesticks, price peaked, and it completely reversed. So now we have 3 strong consecutive to the downside. All right. So what do we normally do in this scenario? Well, I normally take all 3 candlesticks and create a zone and then mark it up. Well, at the same time, those 3 days represent the previous weekly high and the previous weekly low. And this is 23%, and this is 38% of the previous weekly high and low, which is the same thing as these 3 bearish candlesticks. So I like my chances around, and I would like for it to return around 23%, but ideally, based on this chart here in the daily, if we can get anywhere in this 23, 38% zone, I like it. I like it. Right here. This is a good area for us to really execute. And now let's see if we can find an ETM candle around there. And then we'll close it out, guys. All right, look at that, Marcus. 12-hour chart.
They're everywhere.
Drop base drop right at 38%. Right there, guys. That's a good one on the 12-hour chart. Let's see the 8-hour. Another little drop base drop there. Let's see the 4. You kind of have some little BEC action right there. 2-hour. Let's check out the 1-hour. Look at this, guy. This is I'm liking this a lot. I am liking this a lot.
Man, it's been we've reached so far into the 3000s. Like, I remember getting to 3000 was like one day it'll get there, one day.
Mhm.
And then before you know it, man. Well, not before you know it, it's been a while, but I just never thought about it getting up as high as it has. And it's still bullish.
Absolutely, man. I'm answering Donut's question right quick. Yeah, this is a rally-based rally right here. Yes, right? Where price came back and tried to balance it out. So that's kind of where it stopped. So this is a good area for price to kind of take a breather. But I'm really am liking this 1-hour time frame, man. We got the higher perspective measured, high and low of the previous week. These fib levels that you see are the previous week's fib levels. And what's catching my attention is this little drop base drop right here. Right there. That one's catching my attention. Let me see if I see another one that really catches my attention. Right in that zone. Yeah, I like this 20-minute one. So I am liking that 23%, guys. I really am. We have about 33.52. That's kind of where I would like us to go. Okay. I would like us to go just like that, guys. I will see maybe on the 1 hour time frame, maybe come back and kind of fill in this little fair value gap a little bit and then push price back up. And then we can look for the sell from it. But this is my speculation. When the market opens up, come there, push back up, and then we come back down. Sí, Paul, ahí en 20 minutos, ese también me gusta también a mí. Yeah, there's a 20-minute one that I do like there. Okay, that I do like there. And then we just put here the extensions. Where's my 4 hour? Yeah, right here. To the extensions. That's a good target. And then we'll see how fast we can get there. 20 minutes. Sí, ahí está. Está bien. All right. So that's a speculation for the weekly outlook. Two charts for guys, one just for the bigger picture and one with fine detail. Let's close it out, Marcus.
Yes, sir. All right, all right. Well, there it is, ladies and gentlemen. There it is. We appreciate you all. Appreciate your time and attendance. As always, hopefully you enjoyed the session. You got some good information out of it, even if it's uh, concepts that you've heard before. But that's the beauty of what it is that we all are a part of. It's just becoming traders. And repetition over time is what counts. Just like building the body, building the mind, building the skill. It's repetition over time, and actually putting in, the work that you can to build the skill that you want. The results, as they always say, will they'll take care of themselves if we do what we are supposed to do on the front end. We leave the outcome. The outcome will take care of itself. I'll put it that way. But nevertheless, we appreciate you as always, as always. So until next time, we'll see you. G, appreciate you, my man. Hang on. Where am I?
Oh,
Hang
there it
on.
goes. Yeah, appreciate you guys. Just
Okay, you
FYI,
have it.
guys, so there is a YouTube channel that trying to build a little bit. I will share the link here where this recording will be at. So there right here is the YouTube channel to our ETM playlist. So once the recording of this is complete, you can follow it there. If you follow us now, you can what do you call? You'll get an alert once it's ready. So good stuff, man. Close it out with those beats. Thank you, everybody.
Oh, hang
Come on, DJ.
on. That much? I got you. I'm gonna be like I say. It's a little rusty, but it's all good. I feel like you used to, man.
I know, right?
When,
Oh
when
yeah,
you when you
appreciate that,
DJ.
Danimo. Yeah, if you guys Danimo FX, we'll have a study group. Has a study group on Sundays, 3 to 4. Um, if you think our sessions are great, he'll slow it down for you just a little bit more, and just any questions, he'll stop for questions and answers there if needed. But appreciate that, man.
Something is wrong here, man.
I gotta put my playlist.
Hang on. Oh, here we go.
And by the way, these tunes that you hear are homemade from
Oh, man, baby.
St.
Once
Marcus
you
Music.
once you ever hear it. All right, ladies and gentlemen. We'll get it together one day. One day we'll get together and you will know what it is like. But again, enjoy the rest of your weekend. Remember, believe in yourself, believe in your decisions, continue to grow, free your mind. Peace.
Good stuff, man. See you guys. Thank you.
Later.